What's going on, guys? Welcome back to the Commercial Real Estate Blueprint Podcast. Today we've got Alec McElhinny with us. Alec's a really special guest. He's a developer and he actually knows City Plat. He came down and visited us before I was at City Plat. Knows a lot of people in the commercial academy world. So it's pretty cool. We're excited to have you jumping in on this podcast. For those who don't know you, Alec, tell us a little bit about yourself, how you got started in commercial real estate, and your personal background.
Thanks, Jesse. And I've been such a big fan of City Plat for a long time, like 4 or 5 years. So it's just awesome talking with you guys and doing a podcast with you. It's an honor. So
yeah.
I got into real estate right out of college. I bought my first duplex. I just figured like if I was working as an actuary, and if I saved my income as an actuary, it'd take me all the way to 50 to 60 to be able to retire. And I needed a faster way to get there. And real estate was a lot quicker way to get there to retirement. And that's how it started out. And then I started meeting people who flipped warehouses, like Rafiq, for example. And I just couldn't believe like you could do creative structures like that and do like really big projects. And just watching Rafiq go over the last 10 years was just like really cool to see. So I got into industrial value add, and then I met a guy at a conference building flex space, and that's how I got into flex space. So it's just really who you know and talking to people. So
yeah, for sure. We talk about so much on here about environment and who you surround yourself with is who you become yourself. I think the saying is you're the sum of the 5 closest people to you. And it sounds like you've surrounded yourself intentionally with the right commercial real estate people to put you on the right trajectory.
That's all it is, like finding the right environment, the right people. So you said it perfectly.
Yeah. So you mentioned you started as an actuary and as like a lot of numbers based. And I think you kind of saw, if I had to guess, because we did the same thing. When I was in the military, decided to buy a duplex with Graham. We thought we were going to Airbnb it, and like that was going to be our rinse and repeat for real estate. And then realized that really wasn't what we wanted to do, and just realized how much better commercial was because the value this isn't there. Like you have a great running our Airbnb, and you can't even use that to sell it. You can't even go to the bank and use that. Like it just doesn't really matter, honestly. So talk about that transition from you getting that duplex and then surrounding yourself with the right people to get into your first industrial deal.
Yeah, it was, there were a couple things that had to happen to do that. One big thing that came up for me was when I was talking to a lot of residential people, nothing really made sense what they were talking about to me. They never really talked about numbers. It was all about, I don't really know. It was just about like how it felt, and their strategies were it didn't make a lot of logical sense to me. So there were like a lot of holes in that, and I don't know, it didn't really make sense to me. And when I talked to when I started finding commercial guys and talking to commercial guys, like their business strategies like made sense to me. Their logic made sense to me. How they ran their companies made sense to me. So it just made more sense to me. And also the numbers made more sense to me. So I had to also have a big change in my mindset. I didn't think I was capable of doing, big things with my life. And that's just like social programming. Like for a lot of human history, I was just reading this morning about how peasants in Prussia, they had a really low likelihood of social mobility, like being able to rise. And they just had to accept where they were at. And a lot of human history, we just had to accept how things were. And this is like one of the first times in human history where you don't have to accept that. You just have to break out of that mental programming, and you can be anybody you want, honestly. And that's the most exciting part about being in America today. You can be anybody you want.
Yeah, we're very blessed to be in an environment where everybody kind of like, I would say nationally supports that idea, right? Of you can do whatever you want. You can be who you want to be, and nobody's really stopping you. I think I had a realization close to my military time where, I don't know, I think it was my neighbor. It was like, I was going to work and I saw he was coming in, and he was clearly like not dressed for work or anything like that. I'm like, what's this guy doing? And had the realization of, if I had enough income coming in every month that paid for my mortgage, paid for my car, and my just basic living expenses, I didn't have to like have a 9 to 5. And that was kind of like a realization that I had and my mental shift. But I want to talk about your shift, because you not only shifted from just doing residential real estate and duplexes to developing flex buildings, is right?
Yep.
So like that's a pretty big shift. Talk about what made you choose, the asset of industrial and flex and then even developing it?
Yeah, you'll hear this a lot, like the riches are in the niches. And if you apply that specifically to real estate, you want to go to these niche assets that a lot of people aren't touching because there's less competition. If everybody's flipping homes, the margin's going to be eaten up because there's so much competition. Same with the multifamily. There's a lot of people in multifamily. It's really hard to find a deal in that. With industrial or medical office, or if you stick to like industrial in this market, like in a tertiary market, for example, like there's so many people who don't touch that asset and who don't know how it works in that particular market, and there's a lot of things you can do with that. So if you really niche down and then you pick a value add or a development that's a little bit difficult to do that people don't really know how to do, that's where you can find a lot of profit in it. So
yeah, I like that. Niche is definitely, and it's not just niche for me. I think it's also a combination of niche and focus. Like I'm going to focus on just this one thing and I'm going to be really great at that one thing. So talk about your first deal that you did, how you took it down, and what made you think it was a good deal.
The duplex or the commercial building?
The first development, right?
Oh, the first development. Yeah. So it was a 1 acre site, or it was actually a little bit smaller than an acre. And I knew nothing about land at the time, but I met a guy who was building flex space, and I was kind of looking at his project and kind of studying it, and just seeing all the things that he did right and some of the things he did wrong. And with land, land is a little interesting. It's kind of hard to value unless you really know what you're doing. It's raw land plus entitlements and the person who can pay the highest for it. That's essentially what your land is worth. So for this land piece, I think it was around like 0.98 acres, a little bit under an acre. It had like all utilities, so it had a sewer line in front of it, a water line. It had stormwater management taken care of for the facility. There's a stormwater management pond for the site, and it had site plans. So one of the most difficult things about developing is like once you identify a site and you want to build, you might have to wait like 6 months to 2-3 years, depending on where you're at, just to start building. And if you have site plans already, you can start immediately.
So you bought the property with the site plans already approved, is that right?
Yeah, that was a huge help.
Okay. So, you think it was a help? I don't really do land. We do existing buildings, and so we're buying, what's already built. So I wasn't sure if like that actually helps or hurts, but it sounds like it helps then.
It only helps if it's entitled, and that's if it's entitled for the way that you want it. But what I see being one of the most profitable things to get into right now is actually like land entitlement. Like people who just buy raw land and entitle it for highest best use. They'll maybe put in $100K for site plans, and then they'll be able to like double or triple the value of the land because it saves the developer a lot of time. So in time's money and risk.
Gotcha. And so you would be the one entitling it, and then all you have to do is package that up and sell it to the developer, and then they go and build it. They don't have to think about it. They can just go and develop it.
Yeah. Yep. And I'm meeting a lot of people right now. Like that's their whole business model, especially because you're in Raleigh. That's one of the fastest growing markets in the U.S. So I think there's a lot of opportunity just finding land, getting entitled, and then sell it to the developer.
So that was your first deal. What were you doing in the meantime? Like, I know it takes time, and you said it takes like 6 to 12 months to get that kind of thing entitled. How were you surviving? How were you making ends meet during that process?
Yeah, just cash flow from other properties, and also whenever I needed like a bigger sum of money to buy something, like I'll sell something. So
yeah, just figuring out a way to survive.
Yep.
But that was kind of like, it's cool. Like for us, is like, we're also brokers while we're trying to build our own portfolio. I have a glove business that I'm keeping all the money in the actual business at the moment, but that's what's great for brokers. And honestly, like a really good flip. I know a couple guys that they like, kind of like what you're saying, like they'll have a building, they'll buy it, they'll try to flip it. Then that's their big pop. And that's what keeps them going for the next, 6 to 12 months. And they're sitting on tons of cash, but they're not really, they're not living anything crazy. They're just using that to survive until the next deal kind of thing, or buying, like trying to look for the next asset that's going to, keep them cash flow positive and surviving that way. Just always curious how other people are surviving. So we talked a little bit before the episode, but I'm pretty sure you had a little bit of a creative way to take that that first development deal down. Is that correct?
Yeah, our broker was super helpful. She gave us a loan for the land. We got the land at a really good price. I think we bought it for like
Mhm.
270 or something. And like looking back at it, it's probably worth like 400 or 500K. So we
Wow.
already had a lot of equity in there. And part of that is like that's actually pretty common in land to get like a really good deal on something because people don't really know how to value land
Mhm.
unless you're the highest best use developer. So that's the only person who can accurately value that land. So
Mhm.
like I just got a deal under contract like 4 months ago in Texas.
Mhm.
I think I got it like a million, maybe a million and a half under market or what the neighbors are selling, but nobody knew what they could pay for it because there wasn't sewer for the site, and I don't need sewer. So you have to be a flex space developer to know I could do something with this site because
Mhm.
no other person could have touched it in that market. So.
So when you're looking at land, like what gives you the confidence to like take this one down? Like how are you underwriting these markets? Like I think you moved to Austin, so you might have understood the market at the time a little bit better when you're underwriting it. But like how would you even like tell somebody to go underwrite it and then like talk to us about that process? Because I really just honestly have no idea.
Yeah, it's actually it's really simple, but it's a lot of work. So
Yeah.
if you have to work backwards, unfortunately. So and let's use two different asset classes just to like kind of help explain how land is valued. So let's say you can build retail, and let's say you can build flex space. So let's say for flex space you can build it for 120 bucks a foot, and now let's say you can now sell it for 200 bucks a foot. So you have like a 80 bucks a foot margin for your flex space. And I'm just making up numbers just for easy math.
Mm-hmm.
Now you have to
Yeah.
go
Yeah.
to find a piece of land that makes sense with that margin and basically how much do you want to make. So if you can find the land for zero, great. You just made 80 bucks a foot on your building. But let's say you bought the land and your land base for your project was like 40 bucks a foot. Now you're making 40 bucks a foot for your project. And the difficult thing about the land now is the retail guy could look at it, and the retail guy could be like, well, it's going to cost me 150 bucks a foot, but I can sell mine for 300 a foot. So I have 150 bucks a foot margin. I can pay a little bit more for the land. And that's who you're competing with.
Mm-hmm.
You're competing with retail, you're competing with medical office. But sometimes that land might not be able to support retail for whatever reason, or it might not be able to support flex space for whatever reason. And that's why it gets a little bit difficult to value it, because you really have to know how much it costs to build for all these different asset classes to kind of work backwards to figure out what the land is worth.
Okay. So you probably have a lot of time have to spend a lot of time talking to zoning people, and you have like the city kind of people. I'd have to imagine, right?
Yeah, well, yeah. If you talk to a civil engineer, they could be in an architect. They'll be really helpful for helping with zoning and like what bay size and what county you can do for this type of tenant. Your architect and your civil
Mm-hmm.
engineer are really helpful, kind of figuring out what you can put on that piece of land.
Gotcha. So kind of like backing up just a touch, if I'm going to go in and find, let's say I found an acre of land in Raleigh, right? And I know that if I develop a flex space building, it's probably going to cost me like $200 a foot probably to build it, if not maybe a little bit more. What do I need to have? Like, what do I need to make sure I'm buying the land for? And then we mentioned square foot basis. Are you talking about the square foot of the land or the building that you're hoping to build?
Yeah, that's a great question. Yeah, so you want to find the price of the land and then divide it by the square foot of the building, and that's
Okay.
going to be the most helpful for figuring out how much you can pay for that land. And that's
Okay.
another little nuance with land. Like you might find a great 5 acre site, but only like 2 acres of it are buildable. So you
Mm-hmm.
really have to go off the buildable land too. And every county and every municipality is a little bit different. Where out in Texas, I'm building in a county called Como County, where I can maximize a site 100%. I don't need any landscaping. I can put concrete over the entire site. But if I went a little
Mm-hmm.
bit north to Manor, I can only do that to 75% site, and the rest of it needs to have greenery and like a landscaping requirement and a detention pond and whatnot. So, but yeah, you find what your buildable areas, the max amount of flex space you want to put on it, if that's what you're trying to do, and then kind of work backwards from there. So,
Gotcha. A lot of math, but that's kind of
yeah,
the cool thing about commercial real estate. You can point to the math and say that's why this is worth this. What this is, you know what I mean?
it's really
So you
pretty
mentioned.
easy math. So
Oh yeah, sorry. Go ahead.
so
Yeah. So you mentioned that your cost to build was like around $100 a foot. That seems like really low. Is that the case for like Austin, Texas, or is that the case like are you guys like looking to build it like nationally?
Yeah, it kind of depends where you're built. That's a great point. It really depends where you're building. Like if you look at concrete prices, you'll
Hmm.
like the difference between paying concrete in like South Carolina versus New York City is going to be very different. And that's just because how expensive is it to lease out a concrete plant, in New York City
Hmm.
versus South Carolina where there's plenty of land that's cheap. So your material and labor is going to be more expensive in those more expensive markets. Yeah, Austin, Texas is really nice because it's one of the cheaper places to develop, and there's just a surplus of workers here, which is nice.
Hmm.
If you want to get like a quick read on how much it costs to build something, if you talk to like three really good GCs in town that you know well, and just kind of get a feel for what they can build it for, that's a
Hmm.
helpful mark. And then if you GC the project yourself, you can probably do it cheaper than them. But that just requires a little bit more work to figure out how much cheaper you can do it. So
Gotcha. Okay. I want to go back to the first deal that you did. So you bought it around 270. It was worth 540. You guys did the development, right? You guys found the GC. Talk to us about how you took down the deal. Give us like the financing of the deal, how you financed the deal, and then give us like the exit strategy. So essentially, give us the whole picture of the deal.
yeah, so that one actually it was actually kind of hard to raise. This is something I learned about real estate. It's hard to raise for the smaller deals and the larger deals. I don't know if you've
Yeah.
experienced that, but yeah, I found out the hard way. I'm doing a deal out in Texas right now, like a retail development. It's been very easy to raise for that, just because it's a bigger deal, and there's a lot of like
Mhm.
single check writers that can take that down and feel comfortable with it. For these smaller deals, so the 10,000 square foot development, we're probably all in maybe 130 or 1.3, 1.4.
Mhm.
And that's including debt service and all that. And it's kind of hard to find like one guy to take that whole thing down. So we went after we we uh, we raised capital first from like Twitter. We'd find people off Twitter, and then eventually we found somebody who was able to finance the whole deal, and he had like a second position note just to secure him. But
Are you ready to stop thinking about commercial real estate and actually earn money from it? Many investors wonder how to make serious money from their first deal, but the answer is here. J. Scott Shield, the founder of Commercial Academy, is revealing this strategy in his free online masterclass, How You Can Make $1 Million from Your First Deal in Commercial Real Estate. This isn't information you're going to find anywhere else for free. It's really invaluable. So don't delay for your financial breakthrough. Get the playbook that enables you to make your first million in your first deal. Text masterclass to 888-653-1199. Again, that's 888-653-1199. Immediately for instant access. Your path to significant wealth starts now. Remember, it takes one deal, one time to change your life forever.
Commercial real estate investors, a seismic shift is happening, creating unprecedented opportunities right now. Are you ready to seize them, or will you let them pass you by? J. Scott Shield, the legendary founder of Commercial Academy, is about to make unlocking that potential seem incredibly simple. He's opening his playbook in a free masterclass recording, How You Can Make $1 Million from Your First Deal in Commercial Real Estate. Now, this isn't just a theory, it's a direct, step-by-step blueprint from a master who's already forged immense wealth in this very market. Scott will show you how straightforward it can be to capitalize on today's unique conditions and make $1 million in your first deal. That's insane. Stop second guessing. Stop waiting. The time to act is now, and the path is clearer than you think. Text Masterclass to 888-653-1199 for instant access to this invaluable recording. That's Masterclass to 888-653-1199. Discover why one deal, one time can change your life forever. Well, yeah. I mean, that's pretty much what we've done with the recent deal. We got a seller finance carrier on the first position, and then the second position was a hard money note. And very thankful for that person to be able to stroke a check for exactly what we needed to. And currently, we're taking that deal right now, so that's exciting. And I'm excited for that deal too that you got. The second, I mean, when you're raising money like that, you're right. It is definitely easier to take down the bigger deals. I just think it's because of the caliber of people that you're working with. Like they're more experienced. They've done a lot of these smaller deals already. And so like they're more comfortable to take on a little bit more risk. I
yeah,
think that's what it is. I don't know if that's what you see.
yeah, it's something like that, and it's so funny. I was talking to a guy yesterday who he I don't know if he's a fund to fund or if he's private equity, but he was telling me,
Mm-hmm.
Alec, it was the New Braunfels deal out in Texas. He's like, I love the deal, but like you need to pair it with something else. Like it's not big enough. I'm like, it's not big enough. Like that's crazy. So like a strategy for funding deals is sometimes like, can I throw in more? It's just backwards thinking. And also what I've learned about raising capital is have you ever been to like a country club or tried to get to a country club? And they're like, you need to be a member and you need an invite from a member and it's really exclusive and it's hard to get into.
Yeah.
I found
you need like 10 letters of recommendation.
Yeah. And it's really frustrating. You almost like want to prove it to them that you can make it in. That's actually like the frame that is the most helpful for raising capital, I found. Like, we don't need your money. And it's just so different from the rest of business. Because for me, it's like, how can you prove yourself and then get what you deserve? And with capital raising, it's kind of the opposite. It's like, how can you seem the most exclusive and the hardest to set your capital, and that person wins. So, but it's just a different type of business. So I don't know if you've experienced.
Yeah, I mean, we haven't done a lot of capital raising. Honestly, I mean, we want to keep things as small as possible for us in the sense of like, we don't want to work with 1,000 people. We don't want to raise because we've just seen it firsthand where it's like, you're raising money left and right. And now it's like, you've got a business that you're trying to manage, and it kind of gets out of hand pretty quickly. So if we can keep it to like that one person, like you just mentioned, like, hey, this one guy is whoever we're partnered with. So it's me, you, and it's this guy. And like, that's how we want to keep it. It's just as simple as possible. Simplicity for us is just key.
And that's what I'm moving towards now. I'm moving towards trying to find a family office to like they'll do all the flex deals, and then a family office that does all the retail deals. That's like kind of the direction I'm moving towards. And I joined the family office club about a year ago, and that's kind of been I think that's the future route for land play. Just getting funded by family offices. So
okay. Yeah, we've actually had a couple family offices reach out to us about buying some stabilized assets, so that's pretty cool.
Oh, it's awesome, man.
Yeah. Wanted to see what your top 2 to 3 lessons are that you'd give someone who's thinking about getting in development, since you've been in it for a while now.
Yeah, and I'm not like an expert by any means. Like, there's people who've been doing it for like 20 years and been through multiple cycles. But what I can tell you from my experience is, first, like, really know what you're doing. If you really know what you're doing, it really eliminates all the risk. And my first real estate deal, I bought a duplex, and I bought it, I think 50K above market. And I overspent because I didn't know how duplexes work. And that I learned my lesson after that. I never bought a deal over market. I bought everything under market, and really studied the asset. And that's, if you want to invest in a developer, you need to find the guy who sticks to one municipality, who knows it super, super well, who knows it like the back of their hand, and they know their asset super, super well. And they're vertically integrated. I trust the vertically integrated guy who's sticking to their market better than the guy who has 5 deals in different states for development specifically. I'm sure value add's probably a little different, but just because development, there is risk, and the risk is being a bad operator. And if you're a good operator, you can build a lot cheaper than most GCs. You can be interest rate resistant, and you can be recession proof if you're building the right asset and you're the right operator building at the right cost.
Gotcha. Yeah, I think that's great advice. I don't know anything about land, so I'm going to go to an operator that's good with land. If I want to do a development deal, I'm going to call Alec up and be like, "Hey, man, I think I've got something here," and then you might tell me if I'm right or wrong. That's an underrated thing of like just getting some opinions from people. It's like the environment thing that we talked about earlier, but it's the advice of like experts. Like, I don't really know this, but I'm interested in it and finding out exactly how it needs to be taken down, right? Or if it's even worth taking down.
Yeah. Yep.
So you raised money from social media. I think that's pretty interesting. We kind of did that through ours, but it was through Commercial Academy. But so tell me about like how like you were posting on X. Like, are you just posting out there like, "Hey, we need money for this deal"? And that's how you found your second position out there?
The best way I found is like sometimes in Twitter, and there's a whole commercial real estate community in Twitter that's awesome, by the way. If anybody's not on it, you can learn a lot from it. But there's like these little I don't know if you call them meetups or whatnot, but where somebody will host an event and people will just be asking questions and talking. And if you can connect with somebody through that and build a relationship with them, I found that to be the best way. Or if you go into the DMs and people are asking questions and you answer their questions and you build a relationship from there, and you or sorry, not a DM, in the messages, and then you send them a DM, and you build a relationship from that. That's a great way, and it's real estate's all relational from my experience, and just building a strong relationship and helping people is I found the best way.
Yeah, for sure. I think that's great advice. I think for those that are listening that haven't read Who Not How, they need to go listen to that book, because in my opinion, like every issue that you're having in business is not like how to do it and how to solve that problem. It's who can I give this problem to that's going to solve it for me, or who's been through this problem. Like think like in that time, in that like mental frame of like, I'm having this issue, I have to solve it myself. No, I'm just going to go call Alec, and he's gonna be like, oh, you just have to do X, Y, Z. That's it. And you're like, oh, I didn't think about it so clearly, but what's that?
That's so good, dude. That's the best advice I've heard all podcasts. So listen to that, guys.
Yeah, we'll clip that up and we'll push it out. Put that on my YouTube for sure. So I want to flash forward to today and talk about what your portfolio looks like today, and if you still hold that first deal that we mentioned.
Yeah, no, I sold off to partners. The Sham Park one I sold off to my partners. I'm building around 200,000 feet in Austin right now, and that's retail, office, and flex space, and I'm partnering with people, so it's not just me. But I know flex space a little bit better. I have partners who know retail and medical office better. And if you ever start a new asset class, always go with somebody who's an expert in it, and just learn from them. And be helpful. It's been helpful for me. But I'm working on those projects right now, and then we're getting a lot of. I think you mentioned that you found a good retail deal that was like a foreclosure almost. We're starting to see a lot of those with multifamily. And land that's entitled for multifamily. And I'm just getting curious. I'm like, is this the time to be buying these, or is this the time to wait? So, but a lot of those deals are being thrown at me, and I'm just waiting. So
yeah, that's a good question. I feel like it depends on who we've talked to. In multifamily, I'll ask people about that specific question, like you just mentioned. Are you seeing multifamily going into foreclosure and bankruptcy, all that stuff? And it's like people are telling me they're not seeing it, and I'm like, how? Like that's like I feel like there's so much bad debt out there right now, in the sense of like debt that's starting to like be foreclosed on, and notes being called, and haven't heard a lot of people talking about it. I don't know if they're just keeping it to themselves and like, oh yeah, I haven't seen it, and they're buying it all up themselves, or what's going on. I'm honestly not too sure.
So
what's that?
Oh, we're seeing it out in Austin. They were crazy.
Really?
Here, so yeah.
I mean, I know it's not your asset class, but I'm curious, considering the market, like, are people getting like insane deals?
Well, so my buddy just called me yesterday. I'm partnering with him on the one of the retail developments. He said this land was under contract for 4.5, and the development company's entitling it, and the bank has the first position on the land, and the bank's foreclosing on them and wants to sell the note to I think for like $2 million. So yeah, I mean it's a deal for what they got under contract. I don't know if it's a deal today though, because I don't know what I don't know how much it costs to build multifamily and what you could pay for land. So, but it's fully entitled land for half the price of what they paid for it raw. So seems
like a good deal.
Yeah, I think so.
I just don't know
how many millions they put to entitle it. So, because multifamily, it's really expensive to entitle that with MEP.
Is that because of people living on it? That might be an ignorant question. I'm not sure.
Yeah, I think it's all the HVAC, and I think multifamily is a little bit more complicated than industrial. So I think industrial is about like 1-2% of the entire project costs, and multifamily seems to be closer to like 5%. I'm just making up a number right now, but like higher, for example. So
no, I think that makes a lot of sense. That's what drew us to industrial. Honestly, it's like you got a building, you got dock-highs or drive-ins, you got a little bit of office space.
It's so simple.
That's pretty much it. Like you could get a little bit like technical with the column spacing and the ceiling heights and all that stuff, but most users, they don't know or care about any of that stuff unless you're dealing with somebody that's like super, like somebody that's going to go into one of those 200,000 square foot warehouses and they're going to take the whole thing kind of thing. Then they might care about stuff like that. But want to take another angle, another route here. You were on Tyler Cobble's podcast a couple times and you joined his mastermind, I think when he was first starting it, if I'm correct. Talk to us about joining that and what that was like in that experience.
Tyler was so helpful because I hit it big right away in commercial real estate, and then like I fell flat for a year. Like I didn't know what to do after. I'm like, do I go back to multifamily? Because interest rates were changing a little bit, and I was just so confused. I'm like, do I just? And at the time I was in Minnesota, I just got a bigger value add commercial deal. I thought I made it, and I didn't like Minnesota. I didn't like what I was doing. I really like pretty architecture, and I was finding these ugly warehouses and putting paint and lipstick on it essentially. So I just didn't like it as much. And I was hopping all over the place. Like I went down to Orange Beach to see if I would like to get into making condos down there. And then I went to Champaign, Illinois to see if I'd enjoy building RV parks. Like I was just trying out a lot of different things. And I joined his mastermind, and literally just like talking to him for 2 minutes, like set me on a trajectory to like where I needed to be. He just sometimes like you just need to like I guess going back to the beginning of the podcast, like surround yourself with the right people, and he was the right person at the right time to be like, Alec, this is he just heard what I had to say, and he's like, dude, this is the path you need to go down, and I did it. So and that's the benefit of joining these masterminds. It's really the people in it, and you're not gonna get into real estate because you joined a mastermind. You're gonna get into it because of the relationships that you build. So when you join a mastermind, like build those relationships and actually get advice from people and be coachable, like listen to them, because 99.9% of the time they're going to be smarter than you and know more than you because they've done it longer, and just listen to them. You'll be okay. So
yeah, 100%. I mean, that's exactly what our experience was with the commercial academy, and the course and everything was great. But most of my takeaways were just talking to, one of the guys in the group, and he's like, what would be cool is if you could do this and you could do that. And it's like, oh, I didn't even think about that. It's like that experience from the other people. And then now people are doing deals together. And it's just like, you're right. Yeah. It's the relationships that you build, because that's exactly where we got our hard money loan. I mean, because she had seen us growing. It was like she had more confidence almost in us at times, where it's like, oh, like I'm not sure if we can really do this. And then she's like, no, you got it. Like, I believe in you. I'm like, wow, that's crazy. The type of people like that are in these groups. And so if you're thinking about joining any mastermind, like 100% you need to.
Yep. 100%. Yeah. Find a good group of people. So.
Yeah. So one last question before I let you go. Out of all of the stuff that you knew and know now in commercial real estate, what's one piece of advice you'd give your much younger self? Like we'll say like before you even got started in real estate, we'll say like 18-year-old.
Yeah, I would say get around the right people. And like I didn't realize like how much like I could change and how much I could just adapt to my surroundings. And I think everybody's that way. Like I really thought I was just going to be on this W-2 path for the rest of my life. And that was just my lot in life. And just get around people who are doing crazy things at a young age, like big things at a young age. And once you start talking to them, you realize like they're not much smarter than me, and I might be better than them in these areas. And like, that's all it is. Like, that's really all entrepreneurship is. Like, you see what somebody else is doing and you realize like they're not that special. I can do it too. So they're just as human as me.
Yeah.
So.
Yeah, I think 100%. I agree. I think that's a great way to sum up this podcast too. Talk a lot about environment and stuff like that. But, I think that's great. So, Alec, I really appreciate your time today. If people want to connect with you, what's the best place to do that?
Yeah, reach out to me on LinkedIn. You can go on search Land Play on LinkedIn, or you can go on Google and search land-play.com. And that's how you can invest in my projects. I just had one close up, another one that opened up. So if anybody wants to invest in a flex space project that just opened up pretty recently to investors. So
awesome. Where's that going to be at?
Yeah, so that one's that's the new Brownfields deal. So I'm building. So the first phase will be like 4 like small 10,000 square foot buildings, and then phase 2 will be another 3 buildings. And that's right between San Antonio and Austin, right on 35. So it has a 35 frontage. So it's gonna be a good deal.
Yeah, sounds like a great project. Yeah.
Yeah.
And then you said they're 10,000 square foot buildings each.
Yeah. Yeah. So if you stay, it depends on which municipality you're in, but it's best to stay under a certain. I think the national limit's like 12,000 feet, and then some counties it's like 9,000 feet, 10,000 feet. But you want to stay under that limit so you don't have to build sprinklers, and that adds extra costs and more issues. And also, you can condo-ize the buildings and sell off the buildings and get a higher price. So that's really appealing. So
yeah, all true. Well, Alec, I appreciate your time. If you guys want to get in on that deal, it sounds like it's going to be a good one. Reach out to Alec on LinkedIn. So I appreciate your time today. We'll see you guys in the next one.
appreciate it, man. Thanks.